A common question as a business grows is whether or not to stay as an LLC or instead to move to an S corporation. I will be explaining the differences in this video as well as some of the financial impacts that each structure can have on your paycheck at the end of the day. So first, what exactly is an LLC? How are you taxed? And why is it the default option for most people starting a business? Well, first, people usually choose an LLC when they're first starting because it is the easiest to set up. There's very little paperwork needed and very little paperwork needed when you file your taxes at the end of the year. LLC stands for Limited Liability Company, and that's really the purpose of an LLC. It creates a degree of separation between you and your business operations. So what happens is your personal assets are protected in case your business is sued. Ultimately, that's the point of starting an LLC. And LLCs actually have nothing to do with your taxes. The way that you're taxed is just as income. Money that the LLC makes in profit is passed through to you, and you pay income taxes on it as well as self-employment tax. Self-employment tax, in case you didn't know, is your Social Security and your Medicare. So if your business makes $120,000 and it spends $20,000 in operating costs, that means that you net $100,000. So you would pay income and self-employment tax on $100,000. So then how does that differ from an S corporation? Well, first of all, nothing changed about the LLC part when you file as an S corporation. In fact, most common it is that a company is an LLC that files as an S corporation. But the biggest difference comes in taxes. An S corporation pays its owner a reasonable salary for the work they do for the business, and the additional profits over that salary come through to the owner as distributions. But how does this change taxes? Well, before you were paying income and self-employment tax on the entire profit that your business makes. But in the case of an S corporation, you pay income taxes and FICA taxes on your salary, but the distributions that you take only come with an income tax. So once your business income is high enough, you have potential for huge tax savings. Now, there is some downside because there are additional forms that you need to file which cost more money, and there is usually some overhead involved with running payroll and doing all of that on the company end. You also might have state filing fees that wouldn't exist if you were just an LLC. So all of that put together means that you're probably going to run about $2,500 or $3,000 more in overhead than you would if you were to just keep an LLC structure. That's why it's not always the best case to switch to an S corporation unless you're making enough money to justify it. As a general principle, this is not always true, but usually around profit of $80,000 is when you start to see that break point. And switching too early can actually cost more than it saves. So let's actually look at a couple of examples. First, you have an LLC that's making $100,000 a year in revenue. It's spending $20,000 in expenses. So it's profiting $80,000. I've put a list of a couple other assumptions on the screen that are mostly related to the individual that's actually filing taxes. So in this case, the total tax payment would be $15,997. A little under 13 of that is from federal taxes and a little over 3 of that is from state taxes. Now, under that federal tax header is included your self-employment tax. However, if the same person were to file as an S corporation, they would pay $8,335 in total taxes instead. $1,889 would be federal, $3,385 would be state, and $3,060 would be FICA taxes. Now, something that's not included there is the payroll costs. First of all, the company now needs to pay 7.5% of payroll taxes on this person's salary. And the way that we're doing it here is that I'm assuming that $40,000 is being paid as salary and the other $40,000 is coming through as a distribution. So that means there would be an additional 7.5% of $40,000 that's not being factored in here because that would go on the company's tax return, not the employees. The other things not included here are things like additional filings, payroll processor fees, state filing fees, anything like that. Like I said before, some of those things can come out to about $2,000 or $3,000. Let's assume it's on the high end in the case of this example. And that 7.5% would come out to $3,000 additional in FICA taxes paid by the employer in payroll taxes. So we actually need to add about $6,000 to this $8,335 figure. What does that come out to? $14,335. So that is slightly lower than what we would have paid if we were filing just as an LLC. But it's not by very much. That's why I said before that $80,000 is usually that break point. So if you're getting close to that number in profit, it might be time to consider filing as an S corporation instead. You may just want to look at your next year projections and where you think you'll be as far as profit goes. And the reason is because if you were to do the exact same companies and the exact same employees and the exact same owners, but instead, let's assume $60,000 in profit instead of 80, you actually would end up paying more as an S corporation than you would as an LLC. So while yes, the LLC number is higher, remember you need to add $3,000 in payroll taxes as well as about $3,000 in other overhead costs, which means that you're wasting about $2,000 a year in this case, even though that money isn't necessarily paid in taxes. If you found this video helpful, please push the subscribe button below, and you can also watch this video on 5 money mistakes that small business owners make.